Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik, and in this video, we're going to be doing a brief stock analysis on Broadcom stock, ticker symbol AVGO. And before we get into the video, I do want to wish you guys a happy new year. Welcome to 2022. Hope it's a great year for you guys. The next two videos after this one that will be coming out will be a dividend and portfolio update for the month of December and all of 2021. And then the next video after that will be a review of my 2021 goals and how many of those I met. And then I'll also be, of course, making new goals for 2022. So if you haven't seen my 2021 goals video from all the way last year or at the beginning of this year, make sure to check that out first so you're all up to date. But now we're going to get into Broadcom stock. And first of all, we're just going to look at this company overview, just kind of a little explanation, I guess, of what they do. They put this out in December 2021. So they're a technology company basically in the semiconductor space. If we look at this revenue by segment for fiscal year 2021, about 25% of their revenue came from infrastructure software and about 75% came from semiconductor solutions. And they kind of break these down into more categories here on the right. And then they talk about some of their enterprise data center software and lots of good things there. Obviously, Wi-Fi, Ethernet, Bluetooth technologies that they are involved in, modems, things like that. They talk about, Bluetooth and Wi-Fi and 4G and 5G technology as well. And they're also in industrial automation type stuff. So factory automation, renewable energy, automotive electronics. Those are all things that are, exploding right now in popularity and really utility as our technology in this world just continues to increase. I know motion control encoders, those are super useful. Basically allows you just to know where all of your parts are, and that's really important because honestly, I think one of the biggest roadblocks to a lot of autonomous things is really perception and knowing what is where. So encoders are super important for a lot of automation, and that's just something that stands out to me because I have some personal experience with it, I guess. But obviously they're involved in a lot of this stuff, and then they are involved with software as well. Infrastructure, cybersecurity, payment security, all types of stuff like that. I'm not going to go super in depth into that stuff because I just wanted to give a brief overview of kind of what they do. They have some financial data here, and the dividend CAGR over the past 5 years is a staggering 43% on average, which we're going to look at that as well. But that's one of their big things that they're probably pretty proud of, I guess. I certainly would be. I'm currently not a shareholder, but that is super attractive. I don't know how sustainable that is really, but we're also going to basically look at the earnings here right now from the fourth quarter of 2021, which I think ends, their fourth quarter fiscal year ends at the end of October. So the results are from around the beginning of November. So they had revenue of around $7.4 billion for the fourth quarter, which is up 15% from the prior year quarter. GAAP net income of $1.99 billion and adjusted EBITDA of $4.5 billion for the fourth quarter, and then GAAP diluted EPS of $4.45 and non-GAAP diluted EPS of $7.81 for the fourth quarter. They had $3.5 million of free cash flow from operations, which came from about $3.5 million of cash from operations, and subtracted from that capital expenditures of $88 million. And they updated their guidance, or at least reaffirmed it, for revenue first quarter 2022 of $7.6 billion, which is a 14% increase from the prior year. So basically, at least from the fourth quarter of 2021 and the first quarter of 2022, they're both in the 14 or 15% range for revenue growth year over year. And they also talk about first quarter adjusted EBITDA guidance of 61.5% of projected revenue, and they mentioned the quarterly common stock dividend, which was increased by 14% recently to $4.10 per share. And then they also did authorize a share repurchase program of up to $10 billion of common stock in the year of 2022. And then these financial highlights just kind of listed out in a table form here. And the other thing I like to look at is broken down the revenues by segment. So basically they have these two segments that we talked about, semiconductor solutions and infrastructure software. So they had about $5.6 billion of revenue from semiconductor solutions this quarter, which was up about 17% from the same quarter last year. And then the infrastructure software segment was about $1.8 billion of revenue, which was up about 8% from this quarter last year. Then they talk about cash and cash equivalents. At the end of the quarter, it was around $12.2 billion, which was compared to 11.1 at the end of the prior quarter. So that's a nice increase. And they obviously talk about the dividend in the fourth quarter 2021, which was $3.60 per share, which was about $1.5 billion of dividends, which is a pretty staggering amount. And then obviously they increased that dividend by about 14%. So that's probably going to be in the range of $1.6 or $1.7 billion for the first quarter of 2022. And then they go over some highlights for the full year of 2021. So net revenue for the full fiscal year was $27.5 billion, which is up about 15% year over year from fiscal year 2020. And then net income was around $6.7 billion, which was up. Basically, they don't list a percent because it's pretty high. It's more than double, essentially. It was less than $3 billion last year, and it's over $6 billion this year. And then earnings per share is a similar amount, more than doubled. Obviously, we expect some of that was probably because of the COVID pandemic and some of the shutdowns that occurred, things like that. But one of the big things recently over the past year has been these chip shortages. Obviously, Broadcom is very involved in that. I'm not super educated about it, but I don't think it's really their fault. I think it's, supply chain issues, which kind of work their way in slowly and kind of compound as there's more and more steps in the process, so to speak. So that's where we're at. And then if we look at the revenue by segment for the full fiscal year, infrastructure software around $7.1 billion, which was up about 7% year over year. And then semiconductor solutions about $20.4 billion, up about 18% year over year. And then this right here is from their 10K report. This is their 10K report for the fiscal year 2021. So we're going to go down here to financial statements and look at the balance sheet, comparing it to last year. So at the end of fiscal year 2021, they had around $16.6 billion in current assets compared to around 11.9 from last year. So it looks like most of that increase was just the increase in cash and cash equivalents, which is pretty good to see that they are increasing that in case of problems. And the current liabilities are sitting right around $6.3 billion, which was pretty much right in line with what it was last year. So it's good to see that current assets are way higher than current liabilities, and the current assets are growing much faster than the current liabilities as well. Total assets around $75 billion, which was about right in line with last year, actually down a tad bit, and total liabilities just up a little bit of around $50.6 billion, which is down, like I said, from around $52 billion last year. And next, taking a look at the dividends, the current dividend yield is around 2.47%, which is pretty healthy for a technology company. The dividend payout is around $16.40. I think the stock price is around like $600. So $16.40 seems like a lot, but that's for one share of a $600 stock, so that gives it a dividend yield of right around 2.5%, which, like I said, for tech companies, that's pretty high compared to a lot of other tech companies' yields. The payout ratio is around 50%. Which is very healthy as well. And like I said, they have that awesome 5-year dividend average growth rate of 43%. I doubt that'll continue at that rapid pace for much longer, but that's still pretty awesome. Even this year they were able to increase it 14%, which is, nothing to shake a stick at, as they say. So that's pretty awesome. They have only been growing the dividend for about 10 years now, but obviously they are a tech company, and that is a bit of a newer thing for a lot of tech companies. So we'll definitely be wanting to follow this, and seeing them increasing that dividend over a longer period of time would be some good information to have, because that will show consistency. But 10 years is a fairly decent length of time, given the type of company they are. So right now that's not too bad at all. But overall, The dividend for this company is really exciting just because of that dividend growth rate and the payout ratio. I'll definitely be interested to see, how the earnings can grow in comparison to that dividend growth rate, and also how they can grow that dividend over the next few years if they can really keep up some sort of aggressive rate like that. But we're also going to look at the PE ratio right now, and we can see that the earnings have actually fell a fair bit in 2019 and 2020, but they've been growing pretty quickly now again, so that's good to see. And the stock price has just been going astronomical over the past few years. So the PE ratio doesn't look that great. Obviously, little spike in there makes the graph kind of hard to read, but in the early 2010s, it was around 11, 12, 18, so pretty much below 20 most of the time. They were up at the 70 range for a short while, but for the most part below 20 or 30, and now we're in the 40 to 50 range more so, and right now it's sitting at 44.32 for the PE ratio. And if we compare it to the overall technology sector, the overall tech sector has an average of 31, so much lower than Broadcom right now, and the semiconductors industry within there has an average of 33, so again, much lower than Broadcom. But like I said, Texas Instruments is also a similar company. I did a stock analysis on them recently, but like I was saying there, I would say Broadcom is in a sort of similar category as Texas Instruments. They're both sort of, sort of the premier and definitely a very solid company that a lot of investors would be fairly confident in regardless of the PE ratio. So that's something, I'm not saying it doesn't matter, but I'm also saying sometimes you pay a little bit more of a premium just because of the reputation of the business and how solid it is compared to their peers in some cases. So I think the PE ratio is a fair bit higher, which I don't think is a good thing at this time. But at the same time, I think it's expected that it's going to be a little bit higher just because of the nature of their business and the reputation they have. So right now we're looking at a chart of Broadcom on Thinkorswim. This is the 2-year, 1-day chart. So basically going back 2 years to the end of 2019. Obviously, we can see they were in the range around $300 before the crash in March of 2020, and they got down to $155 right there, and they were climbing pretty steadily ever since. And then over the past year, they've kind of been trading flat, and then the last few months, they've really skyrocketed up here. We can see they have a lot of volume right around this $475 level, and it looks like the actual highest volume level from this volume profile is around $315 or $320. But if we actually zoom in here to the 1-year, 1-day time frame, we can see there a little bit narrower volume profile there. Like I said, I estimated between $450 and $500. This one says 435 to 500, or sorry, 435 to I think it's 435 to 506. It looks like is where there's the most volume right there. So definitely, I would like to see it probably closer to 500 before I was looking to buy some Broadcom. They do have a fairly decent amount of volume here, around 550, so it's not too bad, and a fairly decent amount around 640. But overall, not nearly as much volume up here where they are right now, compared to the monstrous amount of volume down here in the $400 range. So I would really like to see it there before I buy more. If we just go maybe less than a year. I don't think we can go less than a year with the, maybe we can go less than a year on the, no, it does not look like we can go less than a year on the daily time frame. But for, this time frame, I think definitely I would like to see it below 500 from a technical level. It's just way overbought right now. You can see RSI, for the past few months has been above the 70 level. So overall, I think that Broadcom is a great stock, and it has a lot of great products. It has great fundamentals behind their business, but I think the stock price is a bit disconnected from where the actual business is, and so for that reason, I would definitely want to see it closer to 450 or 500 before I thought about buying. They're definitely a fantastic company with some great history of dividend growth, but the super aggressive dividend growth makes me skeptical as to whether they can keep that up over the next 5, 10, 15 years. So that's, I guess, my take on Broadcom. Let me know if you do have any thoughts about the stock in the comments down below. And I just want to thank you for sticking around to the end of the video, and I will see you guys in the next one.